Hello guys, you're welcome to Forex CMT YouTube mentorship. Okay, please, if you've not subscribed to this channel, kindly subscribe because on this channel I bring you great insight into the Forex trading world. I teach Forex, I teach crypto and all the rest of them. So you will have a great time, listening to all I have to tell you in this channel. So kindly subscribe and pay attention for a few minutes as I bring you a very important concept of how to know where price is going. Okay, now in Forex, our advantage is when we know where price is going so that we position ourselves. Generally in investment, when you know where price is going or where price is likely to go, then you will have an advantage over others who do not know. Okay, so having said that, I'll be going right into this topic. But before I do that, I want to give a disclaimer here that whatever I share in this video is as a product of my own research and belief of the marketplace. So it is not a financial advice, guys. So let's go in. Basically, there are two things that tells us where price is going. Okay, number one, it's the first question you ask yourself is, where is liquidity? Where is liquidity? That is the first question you ask yourself. Where is liquidity? And what is liquidity? Liquidity is simply, liquidity is simply a place in the market where we'll have huge stop losses resting. For instance, you have, let's say you have a structure like this. Okay, you have structures like this. We have market structures like this. Now, where is liquidity resting? You agree with me that when someone places a buy here, okay, when someone goes long here, okay, the stop loss will be below this place. Okay, it's not as if there are no other stop loss. People may enter here and there are stop loss in between this range. But what we are saying is, where is the most liquidity resting? Certainly, we have most liquidity resting here because there were large orders here. Okay, many people or large volume came in here that pushed price upward. Okay, so there are orders here. So that is where liquidity is resting. In the same vein, liquidity is resting here. In the same vein, liquidity is resting here. Okay, in the same vein, liquidity is also resting here because there are some people that sold here and that brought this price down. So liquidity is also resting here. So liquidity is also resting here. Just like that, liquidity is also resting here. Okay, so that is the liquidity is resting here. Okay, for the purpose of context, the liquidity resting here, these liquidities are called external liquidity. Okay, they are called external liquidity. Let me just quickly put that external liquidity. Okay, I will show you from chart how this works, how you can use these two concepts to gauge where price is going. Okay, now there are other places where you can have liquidity, like for example, if you have like a double top. Okay, a double top like this, you will have liquidity resting as such region. Okay, double top, so we'll have liquidity resting here. Okay, we also have double bottom. Okay, double bottom, we have liquidity resting here. We have triple bottoms and so on and so forth. Okay, so liquidity is resting here. Okay, then we also have maybe previous day high. Let's assume this was yesterday's candle, and this high, there are liquidities here. Okay, and this low, there are also liquidity resting here. So that is the concept of liquidity, guys. So where we have stop losses resting in the Forex space, we'll call that place liquidity. Why is this important? Because when smart money is coming to enter when smart money is about to enter their trades, they will look at where liquidity are, then come for that liquidity and take this liquidity so that their orders will be filled. They don't operate a brokerage account. Okay, they trade the financial market just like that. Then when they take this liquidity here, okay, they will enter their buy and it will go in their direction. Now, why do they need to take liquidity? Because remember, for every buyers in the market, you must need a seller. So they need somebody to sell to them because they wanted to buy. So that is why they took this liquidity here. When they took this liquidity, they forced everybody that bought here to sell, because when a stop loss is taken, that's why this is called a sell stop liquidity. Okay, when a stop is taken here, okay, when their stop loss is taken here, they've actually taken their buy orders, so they've forced them to sell and they bought. So that is the first thing that determines where market will go. Okay, knowing liquidity. Okay, like I said, liquidity could be double top, double top, double top and bottom. Okay, double top or bottom, previous day high, okay, previous day low, just etc. And previous week high, previous week low, okay, previous week low. Okay, that is what frames our liquidity. Double top, double bottom, triple top, triple bottom, so on and so forth. That is where liquidity is resting. So the second thing that determines where prices will go is what the concept we call imbalance. Okay, imbalance. Some people call it liquidity, void or fair value gap. Okay, imbalance price action. Okay, so that is another point that will tell you where price will go. Now, how does imbalance look like? Imbalance, from the word imbalance price action, like I told you here when I was explaining liquidity, that you need sellers for every corresponding buy, you need corresponding sellers. Okay, so what that simply means is that when you have in a market that it was an impulsive candle like this, okay, an impulsive candle like this. Sorry, just my little drawing there. Now, let's assume this also happened, a push-up candle and this, and it push up a bit. Now, you've agreed with me that between this place and this place, okay, there was no sellers here, no sellers here. No, between that place and that place, there were no sellers. How did I know that there were no sellers? It's because they buy here and this opened and it sold off a bit and it bought. This opened and sold off a bit, sold off a bit and it bought. So when that happens, we say this is imbalance. Okay, how do you detect imbalance? It's always three candlesticks where one candle has not been traded into. Okay, having said that, now I'll go to the chart and show you how this works, guys. So let's go to the chart, and so that I will show you this. So okay, so let me just quickly go to the chart and show you where we'll have liquidity and how powerful this is. Okay, how powerful this is. Okay, so I will let me see if I can use some example. Let me just switch to another broker. Okay, so we said liquidity. First of all, we identify the places where we have liquidity. Okay, liquidity. Look at this. This is area of liquidity. It's relative. It mustn't be perfect, but it's relative equal high. So that is a place of liquidity. Now, especially when the both of them combines together, it's a very powerful setup. Like, for example, let's look at this now. This is an imbalance here. Okay, that is an imbalance. How do you know it's an imbalance? Because you see this candle. Okay, price didn't trade into it, so that means that is an imbalance right there. Okay, you see, when there is liquidity and imbalance together, that will give you a bombshell type of trade. That is a trade with high probability that it will play out. Okay, that is that there. imbalance here. You see liquidity right here. Let me show you the liquidity we'll have here. Look at liquidity right here. Okay, look at liquidity right here. Let me take this off a bit. You see this is liquidity here. Okay, do you see this high? Double top, that is liquidity right there. Okay, so now let's see more examples. Okay, so that means even though price was trading down, we know that since there is imbalance here, price will definitely trade into it in the future for the market to be rebalanced. Okay, look at this one again. Very powerful concept. Look at this one again. This is an imbalance. Okay, this is an imbalance right here, because if you check this level here, if you check from here, this week was the last buy we have here. The last buy we have here was this week. So that means from here to here, it was purely sellers. Okay, so we extend out to sometime in the future. You see that price traded into it. Look at another setup here. Very powerful concept. Don't trivialize this, fam. Don't trivialize this. If you add this to your trading journey, it will go a long way to make you see how price delivers. It's going to go a long way. So you see this. This is another liquidity right here. Okay, double top. Okay, this is the week now giving us a double top, and price came into it on a later day, come to this imbalance, and price rally down. So you could have taken a sell here, you get a good profit. Taking a sell here, you get a good profit. Okay, just like that. Look at this now. This is liquidity, and price came into it and it tanked like that. It's a very powerful concept, guys. Now this is the last one I want to, okay, we even have two here. See imbalance here. Okay, look at the imbalance right here. Price came into this imbalance. That is this. I'm talking about this candle now. You see this candle? Okay, nothing traded. No buyers didn't trade into it. So later the price came for it and it tanked. Look at this again. Imbalance. Once you have imbalances, there is a high probability that price will come to that imbalance on a later day. Look at this now. The same thing happened here. Price traded into this imbalance. Okay, price traded into this imbalance and it tanked. Okay, look at this one again. Price traded into this imbalance. So just like that, and that is imbalance for you. Then let's look at, I've shown you liquidity here. I want to use NAS 100. I want to show this. There was one trade yesterday, very powerful trade, using liquidity as a basis for knowing where price will likely go. Okay, so let me make this bolder a bit. You can look, watch this video again and again, guys. It's a very powerful concept. It will eliminate your fear of not knowing where price will go. If it may not go at the moment, but at later time in the future, it will go right there. Okay, that is that point right there. This is, you see, this candle wicks. Okay, you see this candle wick, those are liquidity levels. Okay, you see that price, when it did that, some persons may not be able to spot it, but I was able to spot it. Price came down. Some people feel, wow, price will not go right there. You see price on a later day, went right there and it came down. Okay, just like that, fam. Very easy concept. You see here also, just make sure you watch the video to the end. I'll be giving some concluding notes on this. I'll be giving a very powerful note, so please don't skip to the end of the video. I'll be giving a powerful note towards the end of this video, so make sure you watch to the end. Okay, look at this. You see this week and this week. Okay, double bottom. You see price came into it, just wicked it out, and it continued to sell just like that. Okay, you can also see imbalance playing out here. Okay, Let me spot imbalance playing out right here. They're all over the chart, guys. You see this imbalance, though price was trading higher, price came for it on a later day, okay, and it tanked. Okay, so the last thing I want to tell you in this video, I don't want to make it too long, is that price often move from liquidity to a liquidity, from one liquidity level to another liquidity level. Okay, once price has, look at this now, price has taken the liquidity above, that is, we call this is the buy side liquidity, price will come for sell side liquidity, just like that, just like that. Look at it, that is what form the base of market structure. Price taking this, it will come for this, to come to liquidity inside of it, it will take liquidity outside, take liquidity inside, take liquidity outside, like that, like that. That is how the market moves. So I hope this was helpful. I hope this was insightful, guys. I will see you in my next video, and if you've not watched my previous video on how I thought my simple strategy, please kindly watch it, and you will be glad you've done so. Cheers, and God bless you.